In this video, we will analyze Sanlorenzo stock. We will answer this comment from Adrian. Great video, thank you very much. Got another idea for you. Sanlorenzo, they sell luxury yachts. Actually, I know Sanlorenzo, but not that well. So in this video, we will do a quick analysis of Sanlorenzo, and I will show you another stock that I like better than Sanlorenzo. If you are new to this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade, and I have achieved a performance of 25% per year. And thank you for all your picks, guys, all your recommendation. I love hearing you in the comment section below. I love reading you. So let's start. Sanlorenzo, what do they do? Sanlorenzo is an Italian company, okay, engaged in developing, designing, and building motor yachts. The company operates in three segments: yacht, super yacht, and blue game, of which the majority of its revenue comes from the yachts, the segment that designs, manufactures, and markets composite yachts between 24 and 38 meters long under the Sanlorenzo brand. Its manufacturing activities are carried out throughout shipyards located in Spezia, Ameglia. I don't have a I won't pronounce this one with an Italian accent. That's too hard. The company's geographical segments are Italy, Europe, US, Americas, Asia Pacific, Middle East. Okay, anyway. This is a small company. $1 billion of market cap. If you look at the margins, I like it very well. 70% margins. That's like Hermes. 70% margins are margins of a software company, so very, very high margins. You can get a sense where the company you're looking at is very luxury or not. You want the margins to be above 60%. So gross margins above 70%, I like it. Now, this is what I don't like. What about the operating margins and net margins? We are only at 10%. So maybe, I mean, this is the latest data for 2024, but I don't like how the profitability is low. If you look at the revenue growth, we have the data since 2018. So I suspect that the stock IPO'd recently. The stock went public. The company went public in 2019, December. Since then, revenue has gone up. Net income over the past years, net income has gone up. The company doesn't have a debt issue. They have some cash. So they have, if you look at the quarterly data to have the most recent data, they have what? Around $200 million of cash, and they have $70 million of debt. So let's say net cash of $100 million, right? So yeah, 10% of their market cap is in cash. Okay, what about the free cash flow? Free cash flow will look like this. Still growing, and the ROIC is growing. You have a return on invested capital at 17%. I like it. You have some small dilutions here. Here you have the IPO, so they increase the number of shares. Same thing for the free cash flow. I think you had an impact based on the IPO. Okay, very well. So now I want to check the track record of the company. Sanlorenzo. I want to check the past performance of the company, and because I'm worried it will have too much costs. If I click here, Sanlorenzo, it will be more helpful. What's the ticker symbol? MIL.SL. MIL.SL. No, Sanlorenzo. Milan, sl.me, M-I. Okay, financials, income statement. Let's see what we have. That's the total revenue, right? This is the trailing 12 months on a quarterly basis. We have some seasonality. So the first semester of the year is great. I mean, summertime of the year is great. And then some seasonality. Okay. If you look at the trailing 12 months, this is up and to the right. I like it. Same for the cost of goods sold. If you have revenue of $1.4 billion, COGS of $1 billion. This is not a gross margin of 70%. We have a gross margin of 30-40%. Is Guru Focus wrong? Sometimes. That's why you check on other websites. Okay, so now the gross margins are way less interesting. So, okay, let me dismiss the investment idea in 3 minutes. The gross margins for a luxury company must be above 60%. That's how I like it. Now we have a gross margin of 25-30%. I know boats are very costly to make. Very expensive from a price point, yes, but you need a lot of maintenance, a lot of tools, a lot of manpower to create a great boat, to build a boat. So you need a lot of cost. Oh, I don't like it. Let me scroll down. So the cost of goods sold are increasing. Okay. And what has been the evolution of the gross margins over time? For the gross margins, in 2009, it was gross margin of 23%, now 30%. Okay, so gross margin is increasing a little bit. Finally, what about the operating expenses? You have the selling general administrative cost that is growing more and more. That's the salaries. That's the cost, administrative cost, salaries growing exponentially. I don't like it. Too bad. If you look at the SG&A margin, so the percentage of SG&A costs compared to the revenue. So if you have more employee, this should go up. And you see that you had some fluctuation. Maybe they fired some people here, but we are going from 6.6 to 8%, from 6%, or let's say from 7 to 8%. So maybe they hired more guys, more people. So if you look at the net operating loss, they made a loss. They had a loss in 2021. What about this operating? I mean, let me check. You start from the revenue. Oh, that's the trailing 12 months. Okay, sorry. Wow. On the yearly basis, revenue is this. Quarterly basis. From the gross profit is growing. SG&A is growing more and more. So the EBIT for the company is growing. Okay. Now that's the interest expense. Now it's a plus because they reduced their debt, I suppose. Let me check real quick. Net income, that's the tax expense, and that's the diluted shares. Okay, so no major dilutions here, and that's the EPS, earnings per share over time, going up nicely. Very well. I want to check the balance sheet. What is inside the balance sheet for this company on a quarterly basis? Okay, for the cash, we said they have a market cap of $1 billion, right? Okay, so cash was like $200 million. Euros. This is what we have found in Grow Focus. Short-term investments. What is that? Do they invest in stocks with their cash? I don't know. That's an additional question for you. Net receivables doesn't move much. Inventory. They are building up inventory. They are doubling their inventory. So now I will get you some hints with the analysis, and I will not do a deep dive on this company. The margins, they don't interest me, but I will ask some questions in case you want to continue your due diligence on your side. Why is the inventory going up like crazy? What did they do with the cash? Short-term investments. What's that? What do you do with the cash? Maybe you pay a dividend. On Grow Focus, we said that they had a dividend yield of 3%. Okay. That's the property, plant, equipment growing up, but nothing big. Long-term investments, again, what happened with their cash? Goodwill here, so they did an acquisition. If the goodwill is increasing, that makes you think that they did an acquisition. The goodwill went from 10 million euros to 20 million euros. Oh, that's a small acquisition. Okay. Intangibles are growing. What are the intangibles for such a company? Is it the trademark, patent, the name Sanlorenzo? Maybe that's the case. And what about the debt? Current debt is not that big at all. Like, let's say $50 million, like we saw on Grow Focus. So debt is not an issue. Good. Short-term debt is here, not an issue. Accounts payables, why is that growing? Long-term debt is decreasing. Yeah, balance sheet, not an issue. I would not do a lot of due diligence on this one. Maybe the inventory, the working capital part. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. But for the debt, no issue at all. For the cash flow, now we're talking. Cash flow, let me check if I found something interesting here. No, I would like to see the change in inventory, but we've seen it with the balance sheet. CapEx, they are decreasing the CapEx. The CapEx is stable, okay, but the PP&E was growing. Issue dividend paid. They are paying a dividend, okay, and the CapEx is not moving. So if you look at the metrics, gross margins at 30%, I don't like this at all, especially for a luxury name. You need to be more profitable, and if they aren't able to have 50% margins, it means that there are some constraints and they can't double their prices. Maybe because their name is good, but not that good. I mean, if this was Hermes, they could double their price, or Ferrari, they could double their price and still have buyers. Now seems like they are stuck with 30% margins. Come on, guys, go higher. So I don't know how high luxury this company is. Maybe this is medium luxury, not high-end luxury. What about the operating margins? That's strange. I don't know what that is. Operating margin of 13%. I mean, net margin of 10%. Come on, guys. This is a luxury company. I don't want to see 10% margins. I want to see above 20%. Yes. And what about the free cash flow margin? Yeah, you have some. They boosted inventory, right? What did we say? Inventory shot up. What? Shot up like crazy. Cash flow. Change in working capital decrease. Net income was here. So the cash flow from operating activities was reduced recently. Okay. And if you look at their free cash flow has collapsed completely. Why is their free cash flow collapsing like crazy? This is a big downward pressure from Q1 2024. Okay. What happened in Q1 2024? You start from a net income of $20 billion. Or million dollars, okay. You add back your DNA. Wow, change in working capital. Let me check the balance sheet. That's Q1 2024. Q1 2024. That's here. Seems like they build up something. Inventory here. Other current assets. What happened here? You know what? I have some time. Q1 2024, Sanlorenzo earnings report. Here we go. Here we go. Let me check the cash flow statement. What's that? That's the balance sheet. That's net income. Oh, come on. We don't have a cash flow statement because it's a company in Europe, Sanlorenzo. Okay. Since you are here, you can leave a thumbs up for for the algorithm. Q1 report. Yachts division. No. Let me scroll down. EBITDA. No, that's the same thing. We don't have a cash flow statement for this company. Sanlorenzo Group inventory. That's the balance sheet. We tax. Oh, is this the one? Consolidated cash flow statement. Let me pull full screen. Oh, I don't know if you still see the screen. Anyway, let me take the risk. This is the cash flow statement that we have. And you see that what happened? Change in net contract assets and liability. Changed a lot. This changed. If you want to continue your due diligence, please check these two lines, the inventory and the contract stuff. You want to see what caused the decrease in operating cash flow. Okay, so let me continue the metrics. I'm not even talking about valuation for the moment. I'm just talking, is this a good business? Market cap $1 billion. Price to sales. If you look at the price to sales, it went nowhere. Price to earnings decreased. When they IPO'd, they had a PE ratio of 30, 15, and now we have a PE ratio of 9. Okay, good. Price to free cash flow, because free cash flow is a mess, I won't look at this one. Price to free cash flow of 8. Return on assets, return on capital employed. I mean, if you don't have any margins, how can you have this kind of stuff? Payout ratio is 25%. So yeah, seems like they lack their dividends. And the net income is going up, right? The EPS is going up. Why is the EPS going up while the free cash flow is a mess? An additional question for you. Why is net income growing so much? Because this is the only reason why people think it's cheap. It's because the net income is going up, PE ratio is going down, PE ratio of 8. So, okay. Trailing 12 months, revenue is going up, COGS is going up, operating expenses going up. If you look at the EBIT, still going up, and then everything flows nicely. No, this is just a short-term working capital issue here. Okay, now I want to show you the growth rate since the IPO, right? Net income. Okay, in percentage. Since 2019, since the IPO basically, the revenue has gone up with a CAGR of 30%. Is it right? 30% growth in revenue. That's great. Net income going up 40%. I mean, that's pretty nice. That's pretty nice. And now growth decelerated. Okay, this is why the stock is trading cheap right now. Growth decelerated by a lot. Okay, and if you look at the PE ratio, we checked it already. Yeah, that's it, basically it. Okay, I want to check the growth rate for this, and that would be it. And I will show you an additional ticker symbol, another company that I like. If you look on the yearly basis, oh, you can have the data back to 2016 if you use Stock Unlock. By the way, if you don't use Stock Unlock, you have a link in the description. That's cheaper for you. That's good growth from the company. And if you look at the change here, before they had like 40% growth, and now since 2021, the growth trajectory has changed. 2 questions for you if you want to continue the due diligence. 1, why has the growth stopped? Okay, maybe 3 questions. 1, why has the growth stopped? 2, did we have a pull forward earnings during COVID? Like rich guys that wanted a boat in 2020, 2021 because they had excess money, and now it's going back to a reality, so you have a reversion to the mean, so that's why you have the slower growth. And 3, what is the guidance for management for future years? What are the growth initiatives for the management for future years? Because we like to see 40% growth like we had in 2018. I like to see this. This is good. If the business is expecting to grow 30% again, oh boy, that's a buy. So you have a PE of 8 for a business that will continue to grow. For the net income, in the past, they grew 20%. 20% here, 40%. That's fine. That's fine. 20% growth. I'm still not interested because of the margins, by the way. Boats are not in my circle of competence, so I'm not really a fan of this industry. Okay, very, very, very well. Now let me show you another company if you are interested in the luxury boat industry. This is Katana. This is French, and this is also a small company. The market cap is not $1 billion, it's $100 million. So really small. They have similar high margins. I want to double check with Stock Unlock now. Katana Group. Katana Group. Paris. Okay. KPIs, metrics. I want to check if they have the same margins. Yes, similar. 30% margins. Okay. Very well. Net margins of 10%. Yeah, they follow the financials. Okay, very well. Please check this one if you are interested in boats. This is a Katana Group, French company. unknown company. The margin profile is very similar. The growth profile, I like it a little bit better because we have a better track record, longer track record of going up basically. The net income could be a mess to analyze. I don't know what happened in 2015-16 when the company was at a loss, but now it seems like the growth is sustainable. The debt is not an issue. The ROIC is fine. The free cash flow, wow, is strange. They issued some shares here. I don't know what happened during this period, but that's fine. And it's available at a P of 6, so a little bit lower when it comes to valuation. And the stock has been going nowhere for a while. So that's an additional company I would look into if I were going into the boat industry. So long story short, to answer your comment, Sanlorenzo, thanks for the suggestion. I like the growth. I like the industry, but not at these margins. That's why I don't want to be invested in this industry. The margins are not that high for me. You have other luxury names like Hermes that have very, very high margins, and I like it way better. If you look at the gross margins for Hermes, 70%. Operating margins, 40%. Net margins, 30%. Now we are talking about luxury. So, no, not for me, even at these low prices, but maybe I will be curious and check what the guidance is. If the guidance for 2025, 2026 is interesting, like they plan to have more growth, more efficiency, fire some people, cost-cutting measures, I don't know, maybe I could be interested, but not at this moment. Thanks for the recommendation. That's a very interesting company, and you can check Katana Group as we've seen just here on Grow Focus if you want to go down this rabbit hole. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address, just click the first link in the description and I'll see you on the other side.